The bank you walk into today is not the same bank that exists for someone with $10 million in assets. Same building, same logo, same name on the door. Completely different institution. Different people, different products, different rules, different fees, or in many cases, no fees at all. The experience of banking changes so dramatically across different wealth levels that it is almost impossible to believe the same organization is providing the service. And most people have no idea any of this exists, because banks do not advertise what they offer to people who have more money than you. They do not tell you that the person 2 floors above you is getting free private banking, a dedicated relationship manager available by personal mobile number, and lending rates that ordinary customers are never quoted. They do not tell you, because telling you will require them to explain why you are not getting those things. Today I am pulling back the curtain on all of it, exactly how banks treat their customers at every level of wealth, from $0 to $25 million. And stay with me until the end, because the final level reveals something about how private banking works at the highest tier that most people find genuinely shocking, a service that banks provide to their wealthiest clients that has nothing to do with banking at all. That is coming. Do not go anywhere. Let's get into it. Level 1, $0 to $1,000. At this level, you are not a customer to a bank. You are a liability. A customer with no meaningful balance generates no revenue for the bank through interest on deposits, no revenue through investment products, and no revenue through lending unless they go into overdraft, which is where the bank actually makes money from people at this level. Overdraft fees, monthly maintenance charges, minimum balance penalties. These are not incidental. They are the primary profit mechanism for retail banking at the bottom tier. If you have little or no money, the bank charges you for the privilege of holding your nothing. Monthly fees on basic accounts can consume 10 to 15% of a minimum wage paycheck annually if the account holder is not careful about maintaining minimums or avoiding triggered charges. The banking system at this level is not designed to help you build wealth. It is designed to extract what little revenue it can from customers it does not particularly want. The customer service experience reflects this. Long wait times, call center scripts, limited branch access, and products designed to generate fees rather than returns. Banks at this level spend as little as possible on the customer relationship because the customer relationship generates as little as possible for them. Level 2, $1,000 to $50,000. This is the mass market retail banking tier, the level at which the majority of bank customers in most countries operate. The treatment here is marginally better than level 1, but remains fundamentally transactional. You have access to basic savings products, standard mortgage and loan applications processed through largely automated systems, and customer service that is adequate without being attentive. Your relationship with the bank is digital first. An app, a website, an occasional branch visit for something the app cannot handle. The fees at this level become negotiable in ways most customers do not realize. Banks will frequently waive monthly charges, reverse occasional overdraft fees, and offer modest rate improvements on savings products if the customer simply asks. Most do not ask because most do not know they can. The bank is counting on that. The key characteristic of this tier is that you are managed as a segment, not as an individual. The products you are offered are designed for people like you statistically, not for your specific financial situation. Nobody at the bank knows your name or your circumstances unless you have just applied for a loan. Level 3, $50,000 to $250,000. At around $50,000 in investable assets, something shifts. Banks begin to see you as a customer worth retaining rather than merely processing. This is the entry point for what most banks call their preferred or select banking tier. The fees disappear, or most of them do. You gain access to a named relationship contact, though typically not a dedicated one. Your loan and mortgage applications get faster, more attentive handling. Your savings products improve slightly. More significantly, the bank begins introducing you to its investment arm. Financial advisors appear. Product conversations begin. And here is where customers at this level need to be most careful, because the investment products pushed to preferred tier customers are frequently not the best available products for customers' needs. They are the products that generate the best margins for the bank. The conflict of interest at this tier is significant and rarely disclosed with the clarity it deserves. Level 4, $250,000 to $1 million. Welcome to the affluent banking tier. This is where the language around you noticeably changes. You are no longer a customer. You are a client, a dedicated relationship manager. Access to more sophisticated investment products, including managed portfolios and structured notes. Preferential mortgage rates that are not available on the standard retail application. Invitations to private events. A direct phone number that a human being answers. The quality of financial advice improves here, though it remains commission-influenced at most institutions. The relationship manager has quarterly targets that include cross-selling you products, insurance, investment vehicles, trust structures, and while the advice is genuinely more personalized than anything available in the lower tiers, it is not unconflicted. What this tier represents, more than anything, is recognition. The bank has decided that you are worth a real relationship, and the difference in how that feels compared to the transactional lower tiers is significant enough that most customers in this bracket report genuine loyalty to their institution. Level 5. $1 million to $5 million. This is the entry point for private banking. And private banking is a categorically different world from anything below it. A dedicated private banker who knows your financial life in detail. Access to investment products not available to the general public. Private equity allocations, pre-IPO opportunities, exclusive fixed income structures. Lending at rates and on terms that retail customers are never quoted. Concierge-level service that extends beyond banking into financial planning, tax structuring, and estate planning in coordination with your wider professional advisors. The fees at this level are typically absorbed into the overall relationship rather than itemized. The bank makes its money through the spread on your deposits, the management fees on your investment portfolio, and the interest on any lending. And because the numbers involved are large, it can afford to treat you very well indeed. The defining characteristic of private banking is access. Access to products, access to people, access to information that the mass market never sees. Level 6. $5 million to $25 million. At this level, you are no longer served by a private banker. You are served by a team, a lead relationship manager, a dedicated investment strategist, a lending specialist, a tax and estate planning coordinator, all available to you as an integrated service. The institution is not just managing your banking. It is managing your financial life in its entirety. The investment access at this tier reaches things that simply do not exist at lower levels. Direct co-investment opportunities alongside the bank's own balance sheet. Access to alternative investments, hedge funds, private credit, infrastructure, with minimums that exclude all but the wealthiest retail clients. Lending structures that allow you to borrow against your portfolio at rates approaching institutional borrowing costs. And here is what I promised you at the start. The thing that most people find genuinely surprising about banking at this level. The most valuable service that private banks provide to their top-tier clients has nothing to do with money at all. It is introductions. The best private banks maintain networks of ultra-high net worth clients, family offices, institutional investors, business owners, and private equity firms. At the $25 million tier and above, your private banker's most important function is connecting you to other people in those networks, deal partners, co-investors, acquisition targets, advisory board candidates. The bank becomes a social infrastructure as much as a financial one. This is a service that banks never advertise. It cannot be packaged or priced. It is simply what happens when you sit at the table that most people do not know exists. The banking system is not one institution serving everyone equally. It is a series of entirely different experiences layered inside the same brand, priced and allocated by wealth tier in ways that most customers at the lower levels never discover. The same bank that charged you $15 a month for a basic account when you had nothing will fly you to a private client dinner when you have $25 million. Knowing that the system works this way is not a reason for cynicism. It is a reason to build toward the levels where the system begins working for you rather than against you. That process starts with the first account and the first dollar saved. If you want more content like this, subscribe, and I will see you in the next one.